welcome to our channel. Today, we're diving into the labyrinthine world of tax avoidance by the super rich. Now before you grab your pitchforks, let me be clear, a lot of this is perfectly legal. But just because something's legal, doesn't make it right. We're talking about a system where billionaires can pay a lower tax rate than their secretaries, thanks to a tax code that looks more like a Jackson Pollock painting. So buckle up, because we're about to expose the tricks of the trade and the strategies the wealthy use to keep their fortunes tucked away from Uncle Sam. Let's get started. When we talk about tax shelters, we're not talking about those flimsy aluminum things you put over your patio furniture. Think real estate, where depreciation deductions can make a beachfront mansion seem like a financial black hole. Or how about municipal bonds, interest income, tax-free, it's enough to make a regular person's head spin. And let's not forget about retirement accounts. Sure, they're important for everyone, but when you're maxing out contributions that would make a middle-class family weep with envy, it's a pretty sweet deal. These shelters are often completely legal, written into the tax code in the name of investment and economic growth. But let's be honest, folks, when your idea of economic growth involves minimizing your tax burden while the rest of us struggle, something's not adding up. Maybe, just maybe, it's time to change the damn rules. Let's talk about capital gains, because if you want to understand how the wealthy stay wealthy, this is it. Most of us make our money the old-fashioned way. We work for it. We trade our time and skills for a paycheck, and then that paycheck gets taxed. The wealthy, they often make their money differently. They invest. And when those investments grow in value, they pay capital gains tax on the profit. Capital gains are taxed at a lower rate than ordinary income. So, while you're slaving away at your job, the investor class is paying a fraction of that on their investment profits. It's like playing a video game where one player gets a cheat code to lower the difficulty setting. And don't even get me started on the step-up in basis loophole where heirs can inherit assets and avoid paying capital gains tax on the appreciation. This system is not about rewarding hard work or innovation, it's about ensuring that the rich get richer, even while they sleep. Deductions and credits, the bread and butter of tax avoidance. Everyone loves a good deduction, but not all deductions are created equal. The average person might be excited about deducting their student loan interest or charitable donations. The wealthy? They're playing a different game. We're talking mortgage interest deductions on multi-million-dollar mansions, charitable donations that offset massive capital gains, and property tax write-offs. These deductions and credits disproportionately benefit the wealthy because they can afford to hire teams of accountants and lawyers to navigate the tax code. It's like a giant buffet where the wealthy get to eat first, piling their plates high while the rest of us fight over the scraps. Let's talk about those exotic locales where money goes to get a tan offshore accounts and tax havens. We're talking about places like the Cayman Islands, Bermuda, Switzerland, countries that seem to exist solely for shielding wealth from tax collectors. It's all about setting up trusts, corporations, and shell companies in jurisdictions with favorable tax laws. It's like a game of financial hide and seek, and the wealthy are really good at it. It creates a system where the wealthy can effectively opt out of paying their fair share, while the rest of us are left footing the bill for public services and infrastructure. It's like being on a sinking ship, and instead of bailing water, the first-class passengers are just hopping on lifeboats and sailing off to a private island. Let's talk about business structures, because how you organize your business can have a huge impact on your tax bill. When you're wealthy, you don't just work for a living, you own things. Businesses, real estate, intellectual property, you name it. By structuring these assets in specific ways, you can minimize your tax liability and maximize your profits. It's like building a fortress of financial efficiency, with walls made of deductions and moats filled with tax breaks. For example, a wealthy entrepreneur with a thriving online business might set up an LLC or an S-Corp. Now, they can deduct business expenses like travel, office supplies, even their home office. These deductions are often perfectly legal, right there in the tax code. But setting up and maintaining these complex business structures requires resources that the average person simply doesn't have. It's like playing a game of chess where one side gets to start with extra queens and bishops. Estate planning, the art of dying rich. Most of us hope to leave our kids a little something to help with a down payment on a house or pay off some student loans. But the wealthy? They're playing a whole different ballgame. We're talking trusts, foundations, and gifting strategies so complex they make your head spin. Take trusts, for example. By placing assets in a trust, you can effectively remove them from your taxable estate, reducing your estate tax liability. And don't even get me started on dynasty trusts, those behemoths of estate planning that can shield wealth from estate taxes for generations. When these estate planning strategies result in massive concentrations of wealth that remain untaxed for generations, it creates a system of inherited inequality. It undermines the very fabric of our society. Navigating the tax code is like trying to navigate a minefield while blindfolded and riding a unicycle. That's where tax advisors come in, those financial wizards who dedicate their lives to finding every loophole, every deduction. The wealthy? They're not hiring some guy named Bob who sets up shop in a strip mall every April. They've got teams of lawyers, accountants, and financial advisors on retainer, all working tirelessly to exploit every nook and cranny of the tax code. They're like financial ninjas slipping in and out of loopholes with a stealth and precision that would make even the most hardened IRS agent weep with envy. And let's not forget about those legal loopholes, those little gifts from Congress that allow for all sorts of creative tax avoidance strategies. Let's talk about the ultimate tax avoidance strategy, moving your money or your entire company to a place where the taxes are lower or even better, non-existent. We're talking about inversions, where US companies merge with foreign companies and relocate their headquarters to countries with more favorable tax laws. It's like a game of corporate hopscotch, except instead of squares on the sidewalk, we're talking about billions of dollars in tax revenue. And it's not just corporations that are getting in on the act. Wealthy individuals are increasingly relocating to low-tax jurisdictions, becoming citizens of countries where their fortunes will be taxed at a fraction of what they would pay in the US. It's like a global game of musical chairs, and when the music stops, the wealthy always seem to find a seat in a tax haven. These companies and individuals benefit from the infrastructure, the educated workforce, and the stable legal system that the US provides. They just don't want to pay their fair share to maintain it. It's like going to a potluck dinner, eating all the food, and then leaving without contributing a dish. It's just not cricket, folks. So, there you have it, a glimpse into the world of tax avoidance by the wealthy. While these strategies may be legal, they raise serious questions about fairness and equity in our tax system. When the wealthy can use their resources to avoid paying their fair share, it undermines our ability to fund essential public services and create a more just society. The consequences of this tax avoidance are real. It leads to a widening gap between the rich and the poor, erodes public trust in government, and undermines the very foundations of our democracy. We need tax reform that closes loopholes and ensures that everyone pays their fair share. Thanks for watching, and don't forget to like, comment, and subscribe for more insightful content.